U.S. stock markets concluded a quiet session with light trading volume as the Yom Kippur holiday kept many investors on the sidelines. The week ahead is expected to bring crucial inflation data, including core PCE data on Friday and GDP inflation data on Thursday, which has the market's attention. Stocks opened lower and remained subdued, only picking up momentum late in the morning. One catalyst for this shift was S&P's improved growth outlook for the U.S. economy in the coming year, bolstering the case for a soft landing. September has witnessed a simultaneous decline in both stocks and bonds, as the 10-year yield reached a high of 4.54% on this particular day. The S&P 500 and Nasdaq started the week with 3 consecutive weeks of losses. Furthermore, the specter of a government shutdown looms large, with just 6 days remaining before it becomes a reality. Congress currently lacks a plan to avert this situation. Failure to pass a bill this week would result in a partial shutdown of the U.S. government, leading to furloughed federal workers and the suspension of various government services. Concerns over rising interest rates have driven stock prices lower throughout the month. Several senior Federal Reserve officials have emphasized that interest rates are expected to remain elevated well into next year, echoing Chicago Federal Reserve President Austin Goolsby's statement today. In the currency market, the euro continued its decline, marking a 10-week losing streak and falling 5% from its July highs. Commodities, oil prices experienced a dip, with WTI crude falling by 35 cents, 0.39%, to settle at $89.68 per barrel, while Brent crude futures settled at $93.29 per barrel, an increase of 2 cents, 0.02%. Notably, WTI crude prices surged by 9% earlier in the month due to production cuts by Saudi Arabia and Russia but have since stalled. Gold prices retreated by $9 to settle at $1,936.60 an ounce, as the US dollar continued to strengthen, reaching its highest levels since November of the previous year. Currencies and treasuries. U.S. Treasury yields saw an uptick, with the benchmark 10-year Treasury yield reaching as high as 4.54%, marking a 16-year high. This move follows 3 consecutive weeks of gains, as the market anticipates the Federal Reserve keeping interest rates at elevated levels for an extended period. Chicago Fed President Austin Goolsby emphasized that the bigger risk remains inflation staying above the central bank's 2% target rather than the concern of a too-tight Fed policy hindering economic growth. Sector news breakdown: Consumer autos. The UAW strike against Detroit's Big Three automakers has entered its first week, with significant gaps still existing in negotiations. The UAW recently expanded the strike to include 38 parts distribution facilities at GM and Stellantis. This expansion could result in parts shortages and disrupt repairs at GM and Stellantis dealerships. Tesla's Q3 delivery outlook at Barclays indicates an expected miss in deliveries, with projected figures of 455,000 units compared to the consensus estimate of 463,000 units. Q3 production is also expected to decline significantly quarter-over-quarter. NIO denied reports of considering a $3 billion fundraising round from Middle Eastern investors, which was initially reported by Bloomberg News. Canadian automakers ratified a new labor agreement with Ford Motor Company, averting a potential strike. The new agreement includes significant pay increases for production and trade workers, along with bonuses and a cost of living adjustment. Consumer staples and restaurants. Food and restaurants. Several food and staples stocks, including Campbell Soup, CPB, Mondelez, MDLZ, Conagra Brands, CAG, and Keurig Dr Pepper, KDP, saw declines of 1.5% or more. General Mills, GIs, and Hershey, HSY, hit 52-week lows, reflecting weakness in the food and staples sector, which is down 6.5% year-to-date. Dunkin' Brands, GNUT, announced that its CEO, Tattersfield, will step down at the end of the year, with the current coup, Charles Worth, set to take over from the 1st of January. Grocery, Morgan Stanley provided an analysis of the grocery industry, predicting moderating growth trends ahead, continued gains by private label brands, increased promotional activity by national brands, and continued market share growth for Walmart, WMT, and adjustments at Amazon, AMZN. Bank of America conducted a pricing study, finding that Walmart offered lower prices compared to conventional, mass, and specialty peers. Target, TGT, came in second, albeit at a premium of 8% to Walmart's prices, while Sprouts Farmers Market, SFM, had the highest overall prices, with a 30% premium. Both Aldi and Lidl offered lower prices than Walmart, with Aldi at -11% and Lidl at -1% compared to Walmart. Williams-Sonoma, WSM, shares rose by over 12% after private equity company Leonard Green & Partners, which manages two funds, disclosed stock purchases in the home goods retailer. Apparel retailers, Urban Outfitters, URBN, Nike, NKE, and Foot Locker, FL, were all downgraded from buy to hold at Jefferies, citing concerns about potential pullbacks in consumer spending due to the resumption of student loan payments starting on the 1st of October. Survey results indicated that consumers with outstanding student loan debt were concerned about meeting their monthly expenses, with spending on apparel, footwear, accessories, restaurants, and big-ticket items expected to be impacted. Leisure, gaming and lodging. In the cruise industry, Bank of America reported that average sequential pricing trends decelerated for Carnival Corporation, CCL, and Norwegian Cruise Line Holdings, NCLH, but accelerated for Royal Caribbean Group, RCL, in early September compared to August. Europe pricing showed strength, with Caribbean cruises experiencing strong demand. Energy MLPs and pipelines, Plains All American Pipeline, PAA, and Plains GP Holdings, PAGP, were both downgraded to underweight from equal weight at Barclays. The downgrade reflects concerns about PAA's recontracting outlook and long-term asset utilization. Oil News, Chevron, CVX, plans to increase Venezuelan oil output by 65,000 barrels per day by the end of 2024 through its first significant drilling campaign in the nation since U.S. sanctions curtailed production. Refiners, TD Cowen raised price targets on several refiners, including Delek U.S. Holdings, DK, Marathon Petroleum, MPC, Par Pacific Holdings, PAR, PBF Energy, PBF, Phillips 66, PSX, and Valero Energy, VLO. The upgrades are based on expectations of upside in EBITDA for the third and fourth quarters of 2023, with favorable conditions in the diesel market. Healthcare Biotech and Pharma, AbbVie, announced on Friday that it is discontinuing its collaboration with IMAB related to CD47 programs. As a result, IMAB will regain full control of the development and commercial rights to its CD47 programs, which include lemzoparlimab. Notably, the upfront and milestone payments previously made to IMAB, totaling approximately $200 million, will remain unaffected. Alecensa, Incorporated, ALEC, received a sell rating with a $4 price target from Goldman Sachs. This rating reflects significant concerns about the company's lead clinical stage programs, particularly latozinemab L002, which targets Alzheimer's disease. Apellis Pharmaceuticals, APLS, reported that, effective from 1 October 2023, it has been assigned a permanent and product-specific J-code for Sifofra. This development simplifies the billing and reimbursement process for healthcare professionals using the medication. Ardelyx, Incorporated, ARDX, announced that its partner in Japan, Kyowa Kirin, has received approval for one of its products. Following this approval, Ardelyx received a milestone payment of $30 million from Kyowa Kirin and an additional $5 million through its financing agreement with Healthcare Royalty Partners. Bridge Biopharma, Incorporated, BBIO, successfully raised $250 million in a private placement led by the Qatar Investment Authority. Brainstorm Cell Therapeutics Incorporated, BCLI, came under scrutiny as it submitted what the FDA described as grossly deficient manufacturing information. This disclosure came ahead of a scheduled panel discussion on Wednesday. Harmony Biosciences Holdings, Incorporated, HRMY, faced a downgrade from neutral to sell by Goldman Sachs. Additionally, the target price was lowered to $31 from $40. The downgrade was prompted by emerging risks to the sustainability of HRMY's revenue, which primarily relies on sales of WAKIX. Morphic Holding, Incorporated, Morph, was downgraded from buy to neutral by BMO. The rationale behind this downgrade is the increasing difficulty in defending additional upside for the company's lead product candidate for inflammatory bowel diseases. Novartis AG, NVS, received an upgrade from underweight to equal weight, U, by Morgan Stanley. The firm remains optimistic about the company's near-term earnings momentum and views the European biopharma sector as a safe haven amid concerns of weakening growth and rising real yields, thanks to its relatively high returns. Novo Nordisk /S, NVO, and Eli Lilly and Company, LLY, are anticipated to generate tens of billions of dollars annually from their new obesity drugs, according to Barron's. However, this financial strain of widespread drug adoption may lead to reduced benefits for Medicare prescription drug plans. Healthcare services and medtech. In the medtech sector, Innovix Corporation, Innof, announced an agreement to acquire Lima Corporate SPA, a privately held orthopedic company, for €700 million, approximately $745 million, in cash upon closing, with an additional €100 million in Innovix stock. In the healthcare services arena, Rite Aid, RAD, is reportedly in negotiations with creditors over the terms of a bankruptcy plan. The plan could involve the liquidation of a significant portion of its 2,100+ drugstores. Rite Aid has proposed the closure of approximately 400 to 500 stores through bankruptcy and the potential sale or transfer of remaining operations. In the realm of industrials and materials, Mars Tech, Incorporated, MTZ, extended its month-to-date losses, declining by over 25%. The company has experienced a 7-day consecutive decline, with only one trading day showing positive movement so far this month, the 14th of September. Innovix Corporation, ENVX, announced that its standard IoT and wearable-sized batteries have been selected by Accurate Meditech for their Class 2 FDA-approved mini multivital sign monitor. 3M Company, disclosed that it is evaluating options for restarting its idled FOS manufacturing processes at its facility in Zwijndrecht, Belgium. Materials, Metals and Mining, Alco Corporation, AA, saw its shares drop by over 6% to their lowest levels since March 2021. In contrast, Freeport-McMoRan Incorporated, FCX, ended a 6-day losing streak. Industrial metals remain under pressure, while Alco announced changes in its leadership with William Oplinger taking over as CEO, while Roy Harvey becomes a strategic advisor to the CEO. Cleveland Cliffs Incorporated, CLF, received an upgrade to buy from Citigroup with a price target of $22. Steel Dynamics, Incorporated, STLD, also received an upgrade to buy with a price target of $130. The rationale behind these upgrades is the anticipation of a rebound in U.S. flat-rolled prices by the end of the year, coupled with relatively attractive valuations in the steel industry. However, gold miners faced downward pressure due to sliding gold prices in the wake of a stronger U.S. dollar. Sealed Air Corporation, SEC, received an upgrade to buy from Citigroup with a price target of $41. This upgrade is based on expectations of a year-over-year EBITDA growth rate exceeding the mid-single digits in 2024. The positive outlook is attributed to easier to achieve cost savings, volume inflection, a supportive valuation, and the potential for portfolio actions to drive growth. FMC Corporation, FMC, was downgraded from buy to neutral by Redburn, with a price target of $98. The downgrade is attributed to recent developments in industry-wide sales volumes of crop chemicals and investor confidence in the strength of FMC's IP protection. These factors have led to expectations of further earnings downgrades and increased uncertainty. Dow Incorporated, Dow, received an upgrade from neutral to overweight at J.P. Morgan. The reasoning behind this upgrade is the recent downward movement in equity values, providing investors with an attractive opportunity to purchase Dow shares at a reasonable valuation. In the realm of technology, internet, media and telecom, media stocks, including Warner Bros. Discovery, WBD, Paramount Global, Para, Comcast Corporation, PMXA, The Walt Disney Company, DIS, and Netflix, Incorporated, NFLX, were active following a preliminary agreement among Hollywood writers to end one of two ongoing strikes. However, the agreement is subject to ratification by the Writers Guild of America, WGA, members to officially end the strike. James Dolan, the chairman of Madison Square Garden Sports Corporation, MSGS, stated that he has no intention of selling the New York Knicks and Rangers. There are no plans for a complete sale of these sports teams, as reported by Barron's. Hardware and Software, Ciena Corporation, Quan, received an upgrade from hold to buy at Loop Capital, with a raised target price of $25 from $20. The upgraded outlook reflects increased optimism about the company's short-term and long-term growth prospects, driven by positive feedback from recent industry checks and a successful user conference. Microsoft Corporation, MSFT, was upgraded from sell to neutral by Guggenheim. The upgrade is attributed to the positive influence of the generative AI narrative. The global PC monitor market experienced a notable decline of -17.1% in the second quarter of 2023, primarily due to inventory corrections. However, there is optimism for a potential rebound in the upcoming holiday quarter, as indicated by a report from IDC. While the market managed to surpass modest expectations by reaching slightly over 29.9 million units in Q2 2023, it's important to note that this figure still falls short of the levels observed before the COVID-19 pandemic during the second quarter of 2019. This decline signals ongoing challenges and fluctuations in the PC monitor industry, with hopes pinned on a resurgence in demand during the holiday season.